Hello everyone. Today the stock market had a very tumultuous, turbulent environment. We ended up skyrocketing to start the day. Right afterward, we ended up falling, giving back all of the gains. And then towards the end of the day, we ended up rising and skyrocketing once more. So in today's video, we're going to take a look at what the next steps are for the market. We're going to take a look at the SPY, the NASDAQ, the IWM, the bonds, the large tech stocks, and other economically sensitive stocks. So we can see how to gauge and how to properly play this month, because April is the stock market's best performing month in the history of the past 20 years. So we're going to take a look at all that stuff together. I hope you guys enjoyed today's video. Make sure to comment, make sure to subscribe, and put on your post notifications. And without further ado, let's get started with the video. All right, so just to start off the video, to refresh everyone's memory, we're looking at the past 20 years of data, and we can see that over the past 20 years, on average, the SP 500 does the best during the month of April. So we can see that April, on average, returns 2.3% for the month. The gain frequency is 80%, which means that it does well 80% of the time. So April is the stock market's best performing month. We can take a look at the seasonality chart as well. We can see that right in the beginning of the month, generally we see a large spike up, and that so far is holding true. So this should continue up into the first third of the month. And yeah, we're just going to go ahead and take a look at that. I just wanted to show that real quick. Next, we have job opening news coming out tomorrow morning at 10 a.m. So remember, we are not going to be holding any positions through that meeting. And you should not either, as it is very risky to hold anything during that time. All right, we're going to start off by looking at the tip. I'm gonna be honest, it doesn't look that great. So the tip, it does well, and if it does well, then that means that the NASDAQ should also be doing well. And currently it doesn't look great because of this large wick right at a level of resistance. So what we would have wanted to see is a solid green close above this level of resistance here, but we got a wick, and generally that's not the best sign. But so far, I mean, the fact that we're holding above 110 is a good sign that we could continue moving up higher, but this wick is not the most bullish sign. So that's what I just want to take a look at real quick. We were taking a look at the tip a few days ago down here when it was trading at around below 110, comfortably below 110. So we just continued to rise up, and this strength in the tip helped, and it showed that there was going to be continued strength in the overall market. That's exactly what happened. So, but for now, we're having trouble right at resistance, so that's something to take into consideration. Next, let's go ahead and take a look at the VIX. So we know that the VIX has an inverse relationship to the market. If the VIX is doing well, that means that the stock market should be falling. All right, so it's an inverse relationship. To begin the day, the VIX was very, very strong. It shot up to like 19.5. It was up very substantially in the beginning of the day, even though the SPY was also green. So the VIX and the overall market were both green and doing well to begin the day. And then obviously after the market fell and then re-shot up, the VIX came back to its senses. But what I'm currently looking at, the most important levels that we have to look at on the VIX literally is just 18. If we can hold 18, that if we break below 18, then things can really start becoming very bullish. But 18 is going to be a very major level of support on the VIX. 18 is similar to the 25 to the 26 level on the VIX. So if we're above these levels, then things are very bearish. If we're below 18, if we're below 1750, things are bullish. So the VIX, it's a good way to determine how much more room there is to the upside or the downside. And just looking at the MACD on the VIX in the setup right now, it just looks very bad. So we can see that the MACD is curling up, right? Clearly the blue MACD line is curling up here, yet the price of the VIX is falling, and this is a very bearish setup on the VIX. So once again, we know that if the VIX is falling, that means that the stock market should be rising. So it has an inverse relationship. So just keep that in mind. There's that for the VIX. So honestly, with all the news that's going on with the dollar and oil and rate cuts and everything like that, I feel like the US is probably going to go to war within the next 5 to 10 years. Regardless, Saudi Arabia and Russia basically cut 500,000 barrels of oil each, right? So that caused over 1.2 million barrels of oil cut from circulation. So Saudi Arabia led the cartel by pledging its own 500,000 barrel a day supply reduction. Fellow members, including Kuwait, the United Emirates, Algeria, followed suit, while Russia said the production cut it was implementing from March to June would continue until the end of 2023. So Russia and Saudi Arabia led the cut with 500,000 barrels each. What this ended up doing was, this happened over the weekend, oil futures shot up 8%. So this obviously caused the price of oil to increase, because when you cut the supply, the demand goes up and the price goes up. So that's basically what they're doing. And yeah, all of this isn't as bad as the news about the dollar, but with all of the other countries not relying on the dollar as much, I don't know how much longer it's going to take for some sort of reason to go to war. But regardless, there's that. And this is a chart of crude oil. So crude oil obviously skyrocketed up. We gapped up very, very heavily based off of this news. Things clearly look bullish, right? It would take some news for this to fill the gap back down anytime soon. But regardless, things look bullish on that. And this is a big reason why different oil names and energy names ended up doing well also. So this is Exxon. We have XOP. XOP also did well, which is the S&P gas index. So this did well also. So to be honest, really, oil was one of the main reasons why the S&P 500 held so strong. If we look at the overall percentages for the day, the NASDAQ was red, 0.24%. The IWM was barely green. The IWM heading into the morning was the most green, but it ended up falling throughout the day very sharply. The NASDAQ bounced a bit, right? But the S&P 500 was down, I think, 0.8% at the open. And because of the strength in the bounce in the NASDAQ, as well as the strength in the oil sector and energy sector, the S&P 500 ended up going a bit higher. So it's important to understand what sectors are driving the market. So currently, the S&P 500 on a daily chart clearly looks bullish, right? But we're getting very close to levels of resistance. And if you guys didn't notice also, we are very far overextended outside of the upper level of the Bollinger Band. So it's very unlikely that we get a gap up on the SPY, because if we do end up getting a gap up, then this would be, so basically this is the Bollinger Band here, right? If we end up gapping up, right, then that would mean we're opening outside of the Bollinger Band. And once that happens, things become very overextended to the upside. And just in terms of algorithmic overextension, algorithms are going to see this as a algorithms are going to see this as a bad opportunity to continue buying in, because we are very overextended to the upside. So the Bollinger Band, all it does is it takes the standard deviation away from the 20 exponential moving average. So on each side, the upper side and the lower side. So when we're this overextended to the upside on the standard deviation, it should revert back to the mean, which means that if we're trading outside of the B bands, we end up gapping up further up higher, which would be very unlikely. If that ends up happening, then we should be falling back into the Bollinger Bands. Depending on how far away the Bollinger Bands are, the Bollinger Band number tomorrow, the upper band can be at like 411. If we gap up to 412, there is $1 of downside that we should touch intraday tomorrow. So that's basically what I'm looking at, and I wanted to go long overnight, but because we're this overextended to the upside, because we're tapping on this level of resistance here at 412, and it just becomes a bit more difficult. What I would have rather wait for is a bit of a dip. I would rather wait for a bit of a dip back down to 410. To ideally, what I wanted today was a dip back down to 408, but we never got that. 408 is the 23.6% fib level of the recent highs, the recent low and the recent high, and that would have been a good opportunity to load back up, but we didn't get that. So things looked very, very bullish. We didn't come back and retest any major levels of support. But now what I really want to end up happening is we need to break above 412. So if we can break above 412 tomorrow, that would be a good opportunity to go long again. But regardless, so there's two instances of where you would want to go long. Into weakness. So ideally, the easiest thing would be is if we get some weakness. So if we can retest 410, 409, crack down below 409 and then retesting 408 into weakness, right? If that were to end up happening, right? Say for example, tomorrow we end up opening flat and we're on a downward trajectory the entire time. We try to hold 410 as support. 410 doesn't hold. We end up breaking below that. We end up falling to 409. 409 doesn't hold, and then we have a major drop to 408. Once we drop to 408, that's when a lot of people will end up being bearish. Basically what they need to do is they need to make people bearish. With more people bearish, that'll end up helping the market propel up, and it'll give more steam to the upside. So the most bearish situation would be if we can get a retest of 408, and that bearish in retail's eyes. Obviously, it's not a complete bearish move, but they have to paint a picture. So once they paint the picture in that way, for a bounce off of for a breakdown to 408, once people think that this move upwards is going to stop, etc., etc., people are loaded up on shorts, people are FOMOing into puts, that would be a great opportunity for them to rip it up. But that would be the perfect opportunity. That would be like picture perfect. I don't know if they're going to be able to do that, but regardless, so that would be one instance where I would want to go long. The other is if we can comfortably hold above 412. And if we can comfortably hold above 412, then 414 and 415 are on the table. So regardless, this first week of April, and in general, this whole month of April, I'm going to be leaning long. Unless something just completely changes, and unless we like gap down, or unless we like break below 404, 405, etc. But in general, April has on average a 2.3% gain on the month, and so far we are only up 0.38%. So there's more room to the upside, and I would rather buy into some weakness. But tomorrow, if we end up closing above 412, that would be a good opportunity to swing some calls, and that would basically mean that we broke above this level of resistance. So yeah, I would have loved to go long overnight, but because we're sitting right at resistance, and because the B bands are also very overcooked and hot, I'm just waiting. So I hope that made sense. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, put on the post notifications, the bell notification icon that you guys see, and I will see you guys bright and early tomorrow morning. Thank you.